It's about that time of day again. My name is Joseph. It's Thursday evening, January 5th, 2017. This is your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude is bullish and trying to retest today's high and possibly last week's high as the buyers regain control after today's inventory report. The S&P is also bullish, just like crude oil, trying to retest today's highs after the weekly inventory report gave the buyers a beautiful opportunity to buy low after a deep pullback earlier in today's session. Gold is bullish and rotating off the high of a bull spike in channel after completing the double up target late in the session today. Euro is bullish and trading at the highs of a spike in range after the bulls successfully reached their double up target earlier this morning. And the FDAX is trading sideways inside a narrow trading range after another low volume session. Boy, tomorrow's a Friday session. We got some big news on the calendar. We got some big moves in today's session. Got a great newsletter in store for you guys and gals tonight. Before we jump into our charts, though, and put the plan together for tomorrow, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. It's only a small snippet of the newsletter on the YouTube channel, right? In the description of that YouTube video, there's a link in that description. Follow that link and come join me on the blog at Sideways Markets for the full-length version. While you're here on the blog, don't forget, join the mailing list. In the upper left-hand corner, give me your name and your email address, and I'll send you an email every evening, Monday through Thursday, when our nightly newsletter goes live. Also, please don't forget to catch me on social media. I'm always posting on my Twitter feed. I got new charts being updated all the time on my Twitter feed. Find me there in the lower left-hand corner. Right below the video tonight, don't forget to download those charts. That's right, all the charts you see me using in tonight's video, you can download those charts by following that link below the video on the blog here tonight. And then please remember, if you're not a student here at School of Trade, you're going to learn more with me in 90 minutes on your free pass than you will anywhere else on the interwebs. Grab that free pass, come out and join me as a guest for a few days here next week, right, in our trade room as a trial member. Obviously here, if you're brand new, we got a great frequently asked questions page. Check out the frequently asked questions page, and I'm always here to answer all your questions if you have them. Hit me up on the live support button on the right-hand side of the website. Hope you guys have had a great first week back. Boy, this week just flew right by. Hope you guys are back in the swing of things here this week here with me. A great week so far. We got a Friday session coming around the corner. Tomorrow's a big day. We've got some big news early in the day, which is always great on a Friday because Fridays are always early in, early out because of volume, volatility, and risk taking. In the financial markets, and this goes for anything where there's money on the line. At the end of the day, at the end of the week, at the end of the month, at the end of the quarter, at the end of the year, traders take bigger risks, right? There's a lot of psychology that goes on, right, towards the end of the week. Traders look back at their profit and loss statements for the week, and they tend to take bigger risks late in the day, late in the week, and of course, we can expect that tomorrow. So be aware, tomorrow's a Friday, January the 6th. We're looking forward to another great day tomorrow, but it is a Friday, so early in, early out. Careful anything after 11 a.m. Eastern time. Now, let's see. Anything on the schedule for tonight? No, there's nothing major coming out of the overnight Asian session. Let's check tomorrow morning in Europe. In Europe tomorrow, we get the 5 a.m. Economic sentiment and retail sales coming out of Europe. That is going to be a big deal tomorrow morning, right? We're watching news reports coming out of Europe right now pretty closely, but it's going to take a back seat tomorrow because of the employment situation at 8:30 a.m. This is the big news tomorrow. Every 1 month, the first Friday of the month, unless the first day of the month is a Friday, right, we're going to get non-farm payrolls. The employment situation, right, is also known as the non-farm payroll report, is well known as being the most important, the biggest market moving event that we get every month, right? It's more important than FOMC. You're going to get a lot more people placing their bets, right, after this news comes out. This news tomorrow has long-term impacts on price action until we get next month's report. So first Friday of every 1 month, unless that first day of the month's a Friday, right? That'll be the second Friday of the month. We look for the employment number. Now, what you want to remember about tomorrow morning around 8:30 is you It's going to be real low volume leading up to it. It'll be real low volume leading up to the report because traders aren't going to want to take any risks getting stuck in positions ahead of that employment number tomorrow morning at 8:30. Then after the news comes out tomorrow morning at 8:30, you're going to want to give it at least 10 minutes to see what happens next. Now, normally there's going to be one of two situations that happens. It's either going to be really fast or really slow. Now, here's what happens. This is a big news report at 8:30 tomorrow morning. People have known about this, right, for a few weeks now. On Thursday, right, that ADP employment report, okay, we talked about this last night. It's not a big news report, but what it is it's a leading indicator for what tomorrow's report's going to be. So a lot of what we saw today, whether we like it or not, was pricing in where analysts think the report's going to come out tomorrow. So the bottom line is, after 8:30 news comes out tomorrow, give it 10 minutes. And if we get a report tomorrow morning that is outside of expectations, then all of a sudden the market will be very volatile because all the traders who positioned themselves ahead of what they thought we were going to get, they now have to go to plan B. Right? Professional traders who are holding long-term positions and want to do so leading into the employment number tomorrow, they're going to have plan A, plan B, plan C, and probably plan D, E, and F as well. Right? Obviously, we're day traders here at School of Trade, so we don't have to worry about these longer-term positions. It's one of the big benefits of being a short-term trader. However, though, we do expect tomorrow morning, if that news comes out outside of expectations, be aware it's going to get pretty volatile as traders have to go to plan B, C, D, E, and F, right? They'll have to go and make some adjustments. That's where the volatility comes from. However, if the news comes out within expectations, right, and you can follow that link here on Econo Day if you want and learn more there. There's a button on the homepage of our blog for economic news, and you can read more about the expectations. If we do see the number come out within expectations, everything's going to be priced in already, and oftentimes the market will sit there for 5, 10, 15 minutes, so you want to stay patient. Once again, big news tomorrow. If it comes outside of expectations, expect some violent movement, so stay patient. Or if it comes out within expectations, the market's already priced in the news, right? We heard about it earlier this morning, and so therefore the market will be relatively slow. My best advice for you, give it at least 10 minutes, look for where the trend takes us after the news comes out, and then follow that trend. That's really the only news we have to really pay attention to tomorrow. We've got some factory orders. I'm not going to worry about that. The rig count. All of this is unactionable information. I'm not going to waste my time or your time by talking about it. So watch that number tomorrow morning, 8:30. One more thing about the news tomorrow. One more thing. Promise me here as I go over these charts tonight that you're not going to try to sell a runaway market, right, or buy into a collapsing market. We are expecting some major news tomorrow, and with that major news at 8:30, again, it's going to be low volume leading up to it, so be careful leading up to it. After the fact, though, it can get really wild. So if this market starts to run higher, just because there's resistance there does not mean you should be selling. Okay, these are the times tomorrow where if you don't take this seriously, you can not only lose the money in your account, right, but lose much more, because when it gets really violent and volatile, right, the liquidity dries up and you won't have a buyer for every seller at your price point. So stops won't hold, targets won't hold, so be careful. All right, the bottom line is go with the move tomorrow. Go with the move. This thing takes off. Do not try to fade these moves because they're low. They're low liquidity and they become very dangerous if you don't know what you're doing. So be careful, right? Be careful. All right. I got that disclaimer out of the way. I'm off my soapbox now. I hope I scared you a little bit, right? Try to gamble around that news tomorrow, right? As I always remind you guys, there are so many reliable times during the week to be trading. We don't need to gamble on news events. So stay patient, wait for that move, right? Let it slow down a little bit, follow that trend. And I'm going to do my best tonight to give you some good strategies for tomorrow. But obviously with that big news coming out tomorrow morning, really anything, right? Anything can happen. So let's jump into crude. Crude is bullish and trying to retest today's high and possibly last week's high as the buyers regain control after today's weekly inventory report earlier in the session. The bulls have control, but if you weren't able to grab that beautiful pullback around 2 p.m. Eastern time, you're now trying to buy high, which tells us to stay patient and wait for a correction and look for buying opportunities on the way back to the highs again. If we don't get a pullback, then we look for traps below prior swings, anything to avoid buying high, which is always the lowest reliable trade, right, you can take. As you can see here on crude oil, right, we had a beautiful example today of a great correction during the inventory report. The buyers wasted no time, right, and they bought it right back up. Strong move, held the pullback, and now those buyers are, of course, gunning to retest that high. The objective right now for the bulls is to get back up to that high of day, 54.12, and then we have a pending measured move and a weekly high. Now, it's always very interesting. At the end of the week, markets tend to gravitate towards previous week extremes, right? So if we're running higher here, that prior week high makes for a very, very easy target to kind of visualize, right, for those long-term bulls. So keep an eye on that 54.37. The measured move right now is very much just kind of a guess at this point. We have the A to the B. We're looking for the C pullback, right? Again, I'm very much guessing where that pullback will be right now. We'll have to wait and see what the market gives us, right, tomorrow after that news comes out. I think the most important clue right now is going to be this spike in channel. Right? This spike in channel tells us to look for buying opportunities, specifically buying opportunities down in the correction zone. We have a couple of these spike in channels on tonight's newsletter, so you'll be an expert by the time we finish up with you tonight. We're looking for price to pull back, right? And then up we go from there. If we can break below it, then we have a chance here now, right, to become sellers selling below the correction zone, right? So the spike in channel tells us big, strong move higher. A lot of conservative buyers probably didn't want to chase after it, and they're waiting for a correction. So keep an eye on these areas here. Prior swing, the low of the correction zone. These are going to be areas where we know buyers will be looking for opportunities here tomorrow. And don't forget, as it pulls back, what you want to be thinking in terms of, right, as it pulls back, you want to be thinking in terms of sellers may take short-term control, but then get back above that moving average, right, and then run it back up from there, right? Kind of think about how that pullback, the sellers will have a short-term chance here, right? That'll be their, right? That'll be kind of the low reliability, short-term selling opportunity. Obviously, you can try to gamble with that, but going right into that correction zone is going to be low reliability for those bears. What I want to do is I want to wait for this price to, if it pulls all the way back like this in the correction zone, I want to wait for these sellers to fail, see it jump, right, and then look for that move going back up. Now, it may not, right? For all I know, we may just get a little small pullback here, and we may see nothing but failures here, right? So look for a seller failure, right? Seller failure, and then back up we go from there. The bottom line is right now, we're kind of in the nosebleed seats, right? We're a little bit too high up after that strong run. We know a lot of buyers will be waiting here, and that's exactly where we want to be trading here, right, to the buy side. Now, what if price just goes without us, right? What if it just runs? You know, because that's a possibility. You know, I'm expecting some low volume environments overnight, ahead of tomorrow's jobs report. So what if price just jumps higher? Right? What if price jumps to the high of day? Or what if it goes all the way up, right, to that prior week high? Whenever a market just runs like that, again, we have to be thinking the buyers are going to want to participate, but they're not going to want to buy high. So what we'll typically see a market like that start to slow down eventually. That will give me a chance to find a trading range, and then now I know I'm looking to dig in, right, buying the low, right, buying the low, waiting for that pullback. Whatever you do, don't chase. Chasing is a low reliability. I understand it's not easy. It's not easy to wait for the market, right, to slow down and give you a chance to enter at a good price, but it's one of the most important components to being successful long term. You might get lucky every once in a while chasing a move, but that's eventually going to catch up with you, and those bad habits, right, will bury you, or what I call you'll die a death of 1,000 cuts, right? All those little tiny losses will quickly pile up on you, and you won't be able, right, to do much to trade account anymore. Let's keep going though. E-mini S&P, just like crude oil, trying to retest today's highs after the weekly inventory report gave the buyers a beautiful opportunity to buy low after a deep pullback today. The bulls have control, but once again, we're getting too close to the highs to keep buying. So you want to stay patient and wait for a pullback to support levels below and grab the move going back up to retest the highs. If price runs higher without pulling back, then you know the plan, right? Avoid chasing the move and focus on traps at previous levels of support. This one is even a little more dramatic, right?